This is the Investor Connect podcast program. I'm Halti Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hal Martin with Investor Connect. Today we're here with Vinod of Konglo Ventures. Vinod, thank you for joining us.
Thanks a lot for having me, Hal. It's a pleasure.
So what was your background before investing in early stage companies? What did you do before this?
So I've been a bit all around the world. I come from a consulting background, which led me to travel a little bit. Originally, I'm from India. And so by chance, I had a opportunity to work in a startup in Munich around 8-9 years ago. That was my first exposure to the whole startup world. And I had a great time seeing firsthand how entrepreneurs think about business and scaling up and solving problems. And that experience, I was there for a year, ramping up our operations across Europe. That experience is what drove my interest towards startups in general. And investing came because investing in general is a topic of interest for me. So I try to learn it by reading books and speaking to other investors. So given my background from India, interestingly, around that time in 2011-12, startup investing was taking off. So we had like serious money coming into India on a per annum basis. I think from 13-14, we were talking about $6 to $7 billion every year. So the whole scene was booming. And for me, it was interesting because it is a way for me to get connected and stay connected with India and also kind of get a better bang for my buck, just looking at the cost base that Indian startups have in operating costs versus a European or an American startup. So these were the main reasons why I started looking at India as a geography for startup investments. And yeah, I mean, I didn't necessarily have any background in investments, or let's say I didn't work at a venture capital fund or anything, but I just, together with a couple of my friends, we just decided to learn by doing. And I guess we got a lucky break with our first investment, and we made our mistakes along the way for sure, but it has been a great journey so far since 2013. Ended up investing in over 10 companies so far. I have got one exit where one of the companies got acquired by a US company, and the others are in various stages of their growth. So, and obviously, I also have one, let's say, a loss where one of the companies got shut down. So I have, over the last 7-8 years, gone through the whole gamut of emotions that an investor, early stage investor, goes through. Yeah.
Great. So what excites you right now?
So right now, I believe the way the world is headed is, we're increasingly looking at automation and data-driven world. And therefore, what that means is a lot of the jobs that we have today are going to get replaced by machines or robots. So I'm interested in companies that are gearing towards making that world come true, which means companies that are working with large data sets and have the capability to analyze patterns and derive insights and get actionable recommendations out of it. So that's something that I'm specifically looking at in terms of companies that are able to do that. I'm sector agnostic, so there isn't a particular sector that I'm closely watching. However, more recently, so from my strategy consulting background, I look at natural resources. So originally mining and metals, then more recently getting into water. So a sector that I will be actively looking at going forward is water. So technology companies that are active in the water space is something that I'll be actively looking at. But other than that, I'm pretty sector agnostic. I look at business models rather. So I look at scalable business models and great teams that are trying to solve very big problems.
Great. So you're an experienced angel investor. What's your advice for those who are just starting their journey down the path of angel investing? What do you tell them to do first before they write that check?
Yeah, so I think the investors have to look at it from a portfolio perspective. So that means, there are other asset classes that you should have in your portfolio before you get into startup investing. I haven't really followed that advice myself, because I pretty much started investing in startups and now I'm trying to diversify. But my risk appetite is pretty different. So I would say for an average person, you would typically have, let's say, some very safe investments like a bond or a CD. You would have some in the stocks, you would have some real estate and other asset classes. And when you look at your entire portfolio, an allocation of 5 to 10% is probably something that you can put into startups where it is at risk, but also has the opportunity for an outsized return if you can manage risks properly. And there are ways to mitigate the risk, right? So if you follow a systematic process in identifying the building a pipeline and evaluating the startups and going through the whole process, then you're basically emulating what a VC fund does. And the best way to do that is through an angel network and not try to do all by yourself. So if you have a group of investors who have similar interest and you can work with them to avoid mistakes and you can learn from each other, you can leverage each other's capabilities and network also to add value to the company. So that's what I would definitely recommend. And then the other thing is obviously start with smaller check sizes. You don't want to bet the farm. So try to build a portfolio where, at the end of the day, you want to end up with a portfolio where, again, from the VC world, the portfolio theory is that if you, let's say you have a portfolio of 10 companies, it's a good portfolio if you have like one or two which really give you a very high return, a very, very superior return. So I'm talking like more than 10x, right? So 100x and above. And then you will have 3 to 4 which are in the anything between 3 to 5x return. And the rest, typically you are going to either just recover your money or possibly even lose it. So it's scary, but that's a little bit of the risk profile that you need coming into it. So the advice is, again, that this is super risky. So not meant for everyone. So you need to have that mentality and find ways to mitigate the risk as much as possible.
Well, great. And so you see a lot of startups. What's your advice for those first-time CEOs who are launching a startup? What do you tell them to do?
So for first-time entrepreneurs, I think it's very important for them to really understand what are they solving. In many cases, I see companies that are just doing something very incremental. So they might be solving a problem, but it is not large enough or sustainable enough to build a billion-dollar business on, because there are so many solutions that are out there in the market, or so many competitors or substitutes, that you don't have enough of a moat to build around your business. So it's very important to target large markets and very large problem statements. That would be the first thing. And that usually comes from experience. More than often, I see that coming from entrepreneurs who have real world experience, either working in a professional environment or have some kind of family business, or are serial entrepreneurs. First time entrepreneurs who are just, and I'm referring to entrepreneurs who are just, let's say, coming out of college, typically they lack that market experience. They might be very good at building the product, but they tend to overestimate the size of the market. And that's a problem. The other thing is getting the right team. So you want a team that really gels well, is complementary. So you need to spend some time finding the right partners that you want to embark on your journey with. Because at an early stage, you don't have any other data, right? So you just have the market that you're looking at and the people that you're going to work with. So those are the things that you can get right up front.
Okay, great. Well, let's talk about the state of investing, in particular angel investing. How do you see the industry evolving? What changes do you see coming up?
So I'm actually new to the US angel world. So I can probably comment it from an Indian perspective. So in India, there is a lot of angel investors coming out, a lot of angel networks coming out in the last 5 to 10 years, which is a very good sign. So I think companies in general are finding it easier to raise seed and angel funding. But then going on to the VC funding, that's where the challenge comes. And especially there is a gap between, let's say, what we call as the pre-Series A. What is angel round and between a Series A? There is definitely a gap. So that is one thing that I've been noticing. I think in US is definitely way ahead, and it's a much more mature market. So there is enough depth in all kinds of investors across the value chain. So I think for US companies, raising funding is not that much of an issue as far as I understand. Yeah.
Oh, great. So let's talk about your angel investing. What's your investment thesis? In particular, what do you look for? You talked about team and market and so forth, but in particular, what do you find makes a go or no-go decision on those things?
So I have, again, an Indian angle here. So there are three types of business that I'm looking at. One is an Indian company that has the majority of their cost base in India, but they are looking at a US market or a European market specifically. And the second is an Indian company that is solving Indian problems, because India is also a pretty large market. What doesn't work in India is like if you copy paste a successful model that works in the US and try to replicate it, it typically doesn't work. So India has its own unique set of problems. So if you try to solve that, I think that's also interesting. And third is like a truly global company out of India. And we are seeing some examples of that as well in the recent years, like Fresh Desk and so on. So those are typically tend to be product companies. So those are the three types of, let's say, setups that I look for rather. So the first one is where there is a cost arbitrage to some extent. The second is a very large market and a very large problem that typically can only be solved by Indian entrepreneurs. And the third is if they've really managed to produce a world-class product, that opportunity is also in the recent years coming out of India. So typically India has been known as the hub for IT services, especially in the last since the 90s and the early 2000s. But in the last 10 years, we're also seeing world-class product companies coming out of India. So those are the three categories that I primarily look for.
Great. Can you talk about one or two startups that fit that thesis?
Yes. Actually, the first startup that I invested, which was, looking back, I would say beginner's luck. So it's called CareStack. And they have their development team sitting out of India, and that's like a team of 100, 150. And their market is in the US. So they also have a reasonably sized US operation, more on the marketing and sales side. And what they're doing is it's a comprehensive ERP for dental clinics. So dental clinics, which are one dentist to 3 to 4, even larger chains of dental clinics. Everything for them from in terms of booking to invoicing to insurance and there's a whole value chain. They have like 6 to 8 modules that cover it. And they recently raised a Series B from venture capital and strategic funds. So venture capital, some of the VC funds include Axel, Fidelity, and SteadView. And the strategic capital, meaning industry bodies like Delta Dental and Darby, they also invested in the company. So that's a great validation from the customer side and the investor side. So that's a very good model. I'm still invested in there. That would be the first one I would say. Another one that I like, which is still in its early stage, but I think has the potential to probably fall in the category 3, is called Isle. Isle it's a relationship or matchmaking app, but they have a very different take on it. So completely different from the Tinder approach of just swiping. So they actually spend time to kind of curate, and they look for the onboarding process is such that it attracts people who are serious about getting into relationships. So it attracts a certain kind of crowd, and that they've also actually innovated a pricing model which is purely driven by a subscription fee. So people are actually paying IL to get connected. So it's not ad based, and that's actually creating a very good behavior in that whole ecosystem. So they are quite successful in India, and it has the potential to go worldwide as well. Although they're in their early stages.
Oh, great. So you see a lot of startups out there. What are the challenges you find they face? Is it regulatory? Is it the market? Is it technology? Where do you see your startups spending most of their time?
I think the US startups have a much easier time actually building a company, because US is a great environment for building companies. I myself have faced that or experienced that. Just simple things as setting up a company and opening a bank account in India versus US. It's worlds apart, right? So entrepreneurship is a hard journey as it is. And I think the Indian entrepreneurs have a much harder time because of just the environment and the government, the regulatory environment as well. So that, I think, in that sense, I think the US startups have a much better advantage, or much an advantage compared to probably a lot of other jurisdictions around the world. Definitely India. Yeah, I think it's more around that, but also, so that is one. The second thing is that now we are seeing very large companies like Amazon, Google, Facebook, and they're dominating the market to such an extent that there aren't a lot of opportunities for new companies. So almost anything that a new company tries to do, if they're successful, they quickly get bought out. So the chances of building like very large companies, and I'm talking about multi-billion dollar outcomes from scratch, is getting more and more difficult. And that's because you have this effect of such large companies that are operating out there. They got ahead with the internet and the network effects, and that's just an unfair advantage that they have. So going forward, I think unless we are looking at a completely different sector, completely new technology, let's say when you think about the American dream, someone does the hard work and just builds a business ground up and becomes successful. I think there is a cap to that, how big you can become going forward. And that's just because you have these monster companies out there that can just swallow you up at any point in time. So I think those are the big two challenges.
Great. So you see a lot of applications and sectors out there. If you had to pick one or two as good opportunities for investors to pursue today, what would you call out as good hot sectors for investors to review?
Yeah, I think anything to do with large data sets. So in terms of analytics, I mean, there is a lot of buzzwords that are AI and machine learning and predictive analytics and all of that. So it's still very early stage, but if you are able to really go deep and find the companies that are actually making a difference, I think that is for sure a sector that has value and will have more value going forward. Even if you look at what is the kind of skill set that young talent young people should get, I think it's around these topics, right? So artificial intelligence, machine learning, predictive analytics, and so on. And that's essentially you have the capability to handle very large data sets and derive meaning out of it. That's going to be an important skill set going forward. So whichever company is working in that direction is working in an interesting direction. I mean, I'm not specifically talking about the use case of the end product, but this is the trend, or this is the overall direction that I'm talking about. Yeah.
Very good. So in the last few minutes that we have here, what else should we cover that we haven't?
So I just want to mention that although I started with startup investments, I moved to US in 2015, and I quickly realized that my portfolio is heavily skewed towards startups, and I really needed to diversify, because startups, as you know, is super risky, very liquid, uncertain when you get the money out. So I actually started getting into real estate, and I'm based out of Philadelphia. So we have a very interesting real estate market here where the rentals, I'm looking at building a rental portfolio, basically buying properties which at a discount and that need a lot of work to be done, and turning it around and leasing it out. So that's a great model because it's asset backed, it's cash flow based, it's brick and mortar, so I can see my investment, and I'm also adding a lot of value to the whole landlord experience, because what I've also seen is that a lot of people have their previous landlords didn't take care of the property, and they necessarily do not have a good experience being a tenant. So just being a decent landlord is already a huge value add. So for me, it's great. I like that opportunity. Both, I mean, obviously it gives me the financial return, but also I'm actually to some extent impacting lives.
Well, great. Well, how best for listeners to get back in touch with you?
I'm easily available on LinkedIn. So I think you have my LinkedIn profile. If you just drop me a message, I'm happy to especially talk about people who are looking at angel investing and how to get started. Happy to share my experiences, or also real estate. Happy to also talk about my learnings from that over the last 2 years. LinkedIn is the best.
Great. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Yeah, I also wanted to check if you guys are organizing any events in Philadelphia. Let me know. Happy to come by.
That'd be great. Looking forward to it.
All right. Thanks a lot, Hal. It was great talking to you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.